So we've said that trusts are popular, and they can arise or come into existence in various situations. Maybe when somebody dies, you'll have a trust that's established then. So there are some main reasons why a trust is a favoured entity, maybe when compared to other types of business structures. And firstly, they're flexible. We're going to talk about that today. And there's certainly taxation advantages to having a trust that you don't get with every other type of entity. Now, contrary to popular belief, a trust is not a separate legal entity. There is no separate trust entity which can own things or take actions. Generally speaking, it's the trustee who must act on behalf of the trust beneficiaries. So, the term trust refers broadly to a relationship, and it's an obligation that's owed by a trustee, which can be an individual or it could be a company, to one or more beneficiaries to carry out the trust duties which are attached to property. So in other words, the property might be a business, it could be an asset, and the trustee will have to follow a document called the trust deed, and it will carry out these duties. So let's have a look at it then. We have basically four elements. We have the trustee, we have trust property, we have beneficiaries, and then we have this obligation attached to the property. So the obligation is imposed on the trustee to deal with the trust property on behalf or for the beneficiaries. Now, a trust can be verbal, but in most situations that we deal with as accountants, they'll be in writing. So the trustee contains most of the rules in relation to the trust. So the answer to many questions about what the trust can do are simply in the trust deed. You read it, you have a look at it, and you read through each clause, and you determine how the trust will operate or function. Now, it's also important to note that while many of the rules governing the trust are contained in the deed itself, there is also the law of trusts that's evolved over many centuries, so trust law itself, that can be applied here as well. The other thing to note is the tax law legislation itself. The Income Tax Assessment Act of 36 in 1997 can also have rules in relation to trusts. So we need to be careful of these when we're making our decisions as a trustee.